Welcome back to the channel. I hope you're happy and healthy and you're enjoying your life wherever you are around this beautiful planet of ours today. I'm coming at you with a little bit of a head cold, so don't mind the sniffles here and there. I hope to get back to 100% by tomorrow. All right, today's video, we're looking at the Bitcoin price prediction for October, going through the major analysis, timing, price, and massively the emotions of the market. Now, if you've been in the market now for several months, maybe even from the tops of the bull market, it's not only just about understanding where to pick that bottom, where to pick that top, but it is getting through the absolute ridiculous emotions of the market itself, avoiding the FOMO, avoiding the FUD, and basically trying to buy low and sell high. So that's what I want to get into in today's video. Make sure you smashed the like button, subscribe with the bell notification icon so you can tell YouTube what you want to see in your algorithm. All right, guys, the previous videos we had here, I've left a playlist at the end of this video. So go back, do your homework, check these videos, look at the analysis, and it's all up there for you to see in terms of what my predictions have been in the past so that you can get a better idea moving forward into the future and just how accurate we have been. So this was a September video, and then this is the short playlist here, September. This was the August video. Bitcoin is entering one of the worst months for crypto traders. It got a little bit triggering at that time for people watching. However, it has proven to be absolutely spot on. July, August, September, no doubts about it, have been some of the most difficult times for crypto traders because we've been in an absolutely tight trading range, one of the tightest trading ranges since the previous bear market. That's several years ago now. So it has stood the test of time. That's what we had anticipated. Remember, nothing is 100%. But just going by the history of the market, the data that we have sifted through and then come to our own conclusions about it, it basically worked out to be that. So let's see if we can do that again moving forward into October. And I've also left this video here that I posted in February for the 4-year cycle predictions in terms of a bottom. This gives the timing of the market. Remember, price is what we always think about, but if we can get the timing better, that is going to give us a far greater opportunity of getting the low rather than just waiting for a price, because sometimes that price never comes, but we can start to get a feel for the timing and also the market sentiment that lets us know that maybe things are falling short of our particular targets, just like that 100K at the top of the bull market. All right, so this is the FOMO stuff here. I just want to quickly run over before we dive into the video, just as a reminder. Short term, Bitcoin, we were looking for a break above 20 or a close below 18. And this has been going on for over 2 weeks now. You can see back here, 17th of September. Today's now the 3rd of October. These were those false moves, the FOMO stuff on the short-term timeframes that unfortunately catch people out. Pump up, hold up there for a few hours, and then the dump happens again and again and again. So this is on a very short-term time frame. So I'm just making the warning, the disclaimer, the caution here that I think October may have one of these events, but on a much bigger scale, which means this could go over the course of days, maybe even a week or two, mostly days, I think, before it reverses, and that could catch a lot of people out. So stay very alert if you are looking to trade, have those stops in place and all that sort of jazz. All right, because this is easy to get out of, especially on the shorter term timeframes, the hourly stuff, the 4-hourly. But if it happens on a longer term time frame, you can really get caught out in that emotion of day after day, the market's creeping up. Then you just see it absolutely dump the following week, just like the Ethereum merge. You know, we've covered that very, very closely on both March and, of course, the recent one into the August and September tops, and it was an absolute sell the news event. That's what I just want to put out as a particular warning at the beginning of this video. So a recap of August and September, previous predictions. August was going to be range bound, difficult trading. September, again in that video as well, put out ahead of time, range bound, difficult trading. That's why I said August was going to be one of the worst months. September, again, was going to be a very difficult month. The action for the investors at the time was buy in cycle low zone. And if you've forgotten those, I've got that in today's video as well. I've got a pure video on that as well, where I'm looking to buy Bitcoin DCA into it. And for traders, there were trading opportunities. Of course, there always is, August, September. But the note was to take profits quick and keep stop losses tight. All right. Red or green month. This is usually the heading that we look at everywhere else, and I don't focus on whether it's going to be a red or a green month. I don't think that's important. The important part here is the volatility, because the volatility is what brings the emotions, and if we're not in control of our emotions, then we screw ourselves over and over and over again, regardless of if we are trading the short term or DCAing into the longer term stuff. If we're not aware of whether the month is going to be volatile or not, then that can lead to a lot of problems in our plans. So what is October telling us for 2022? Now, remember I just said I'm not focused on red or green months, because look what we saw for August and September. Who cares if July was a green month and August was a red month and September was a red month? The price didn't go anywhere. What's more important is if we can take action, if we can know when we are going to buy, when we're going to sell, when we're going to cover any sort of losses that may occur. That's the most important thing, not whether the month is going to be red or green. We can literally just go back and look, okay, 10 out of the 12 were green and 2 of them were red. Okay, that's great. But what about the actual move of the month? I think that's a little more important. So let's see if we can uncover that, just going back through the course of history here. So 2 quick things here that I've noted. I've got pivots and strength. Pivot is a market turning point. Strength is a breakout or confirmation, or essentially the market giving us a signal that we're ready to move, whether that's up or down. So that's what I want to understand more so about the market, rather than just trying to pick the exact price. It doesn't matter what the exact price is. We just want to know where those signals are coming in. So starting back from 2010, it was a pivot and a strength month. So pivot essentially is our swing, our Gann swing indicator here. You can see there was a significant pivot and there was the strength that came in. So that's just my quick definition of what strength is. Basically, it can be a breakout or confirmation of the trend, depending on which direction it's going, and of course, up or down. So pivot and strength, October, that's one of them already. That's a big month there for October. It had significance in the market. Now, in 2011, it was also a very significant month. You can see that it was basically a pivot point with November going a couple of cents lower. Essentially, the market stopped. So what you would call in Wyckoff analysis, stopping volume. The market was able to stop in October, and then a couple of months later, we had a reversal in December and into January. So it's a pretty big move there, even though it might not look like it on the chart here. If you look at this from $2 up to $7, it's a very big move in terms of a percentage. So October also was a pivot point. Going to 2012, it was a pivot, but the market was still undecided whether it was ready to move yet. And that decision only really came, you could say December, but really into January. So this also goes pretty well into the rest of our 4-year cycle analysis in terms of which quarters are going to show us more confirmation within the market. So August had the peak, September kept running up, but it was a lower top. October had the turn, so it was a reversal, and then the market needed a couple of months to decide whether it was ready to take out the previous top and continue on in that particular bull market. So this is my entire bull market here up to 2013. All right, so 2013 was a pivot and strength. So it was both in this case. You can see the low came in here in July. It had a higher low, which is very, very significant for the macro trend here. And then it was also a breakout point. It broke the previous swing top, and it closed above the previous all-time highs candle. So this was the previous all-time high close, April 2013. October managed to close much higher, although it didn't get higher in terms of a price. It did close the highest. So that led on to the next months being extremely strong as well. So you had November into that new all-time high. December just held out and then dumped. So that leads us into 2014. We had a pivot. It held the market up for about 2 months. So October low, a little higher close. November had another peak, and then December was just holding out before you got that final dump into January. So if you're starting to notice a pattern, Q4, potentially Q1 are very significant times in this market, in Bitcoin. Going forward again, 2015, this was strength. This was basically the breakout of the accumulation zone. So although it was a pretty big month of 36% up, it basically dictated and told the market, almost definitely confirming to the market that this move is now on. This is the October candle right here, just so you can see it. The close was the highest close it had in this entire period here. It broke out of the accumulation, the dump month, which was January. You can see that it opened at $319 and then October closed at $323. So it was the highest closing month since going back to November. So nearly 12 months of that period. So that was a very, very strong month in this particular case. Of course, we need to factor in what stage we are in the cycle, the bull and the bear. We'll get to that. So don't worry. But you can see this was the breakout month after this bear market and accumulation. All right, moving forward to the next stage of the bull market. So you had the October month here of 2016. It was a breakout month. It broke, this is October right here. It broke above the previous top, closed above the previous top. It closed above the previous lower swing top, and it basically closed above that, that candle as well. So it had a lot of strength into October of 2016 to then signal again, this market's not done, and we're going to head up higher. All right, next month was 2017. Again, it was a solid continuation of the bull market. September was the reversal. It was the previous all-time high in 2017, September, reversal. And then October basically said, screw it, we're still on, keep going, tons of strength into October. So it was still showing strength. And this is showing a lot of strength to upsides, but can also have strength to the downsides as well, just within that same trend. Now we get on to 2018. Essentially, this is October right there. There is not much happening at all. So I've just got here, it's a nil reading. This is October. It didn't go any higher or lower than the previous months, maybe by a cent or two. No, not even that. It stayed within the trading range of the previous month. That's nil. The next month, nil again. It did go a little lower, but it didn't move that much higher. So nothing really to say about those 2 months. So far, the trend has showed that we've had a fair bit of strength and a fair bit of pivot. So some sort of direction we are given in October. Going forward again, so we had nothing in 2018, nothing in 2019. The signals were given later in the year. So this was 2018, December. The signal again was in March. So basically that quarter 4 or quarter 1, the more strong signals were given. Going forward, 2020, we had the breakout, so strength. This is pretty cool to see, and it was very similar to the previous bull market where you could see the strength really starting to show its hand. It was here in 2016 as the market was starting to kick into gear for that next stage of the bull market, and that happened again in 2020. It broke through that previous top, another swing top. It closed higher than all of the basically that short-term bull market that Bitcoin experienced in 2019, and it was one of the highest closes just before that 2017 top. So it was really starting to show that the market had a lot of strength and we were about to do something pretty big. Same sort of deal, 2021, it broke out of all of this downtrend here. We had the Evergrande crisis and all that sort of jazz in September 2021. If you recall, went to a new all-time high on Bitcoin, so $67,000. And then November put in that next all-time high and then basically crashed from that point. So October was still another very strong month. So that leads us to this month. And what particular part of the cycle are we in for Bitcoin right now? Well, we're obviously not in a bull market. We are potentially in an accumulation period. Are we still in a bear market? Well, we can confirm that we are still in a bear market. So we essentially have bull, bear, or consolidation. And consolidation can be broken down into either accumulation for the move up or distribution for another move down. So right now, we have more times that we've seen strength, but that's in a bull market or the beginning of a bull market. And if we are in a bear market, then what October has shown is it has been a pivot or a month that basically just trends sideways within a range. The bear market in 2014 did see a small pivot, and you could basically say that the market traded within a range for November, December, and then had that final collapse into January as well. Now for the prediction of October 2022. Well, we're still trading within this very tight range of 17.5 to $25,000. So unless the market can close above 25,200, this trend will remain either down or uncertain. At the moment, it's down. If we start to get a swing in the market, just breaks last month's high of 22,700, and remains under 25,000, well, then that puts us in a slightly higher low and confirms an uncertain trend. It sounds a bit strange, doesn't it? A confirmation of an uncertain trend, but essentially it would put a higher low in, but a lower high. So we're still expecting a potential of a move down, which is what we have seen in the past. You can see that the market held up in the bear market of 2018. In 2014, it basically put in a pivot, but was still slightly lower than the April low. And then the market went on a rally for November. So just looking at history, what's happened in the past, probably within these ranges here, or maybe slightly out of the ranges, but I don't expect anything that's happened in the bull markets where you get those big moves and confirmation of a reversal in the trend. I would love for that to happen, but I don't think that's going to happen just yet. There's probably still a fair bit more time to go, which leads me over to the timing of the market. And this can be also found in far more detail here in the Bitcoin 4-year cycle plan. But just to give you a quick update in today's video, timing, the yellow rectangles here are the bull markets. The empty space right here is the bear. These periods of the bull markets have been 37 to 35 months. So that's about your 3 years. And to the downside, these two are 35. To the downside, you can see that we were 14 and the next one was about 12. So this is December through to December of 2018. So November was the top. We're now getting towards that period where we could probably start to see a final low. And if it's not the exact low, it's not far off it, just based on what we've seen in the past. Now, the other thing here is we're currently in the lowest monthly close in 2 years. So if we are to see a bit of volatility within the first week or two of October, I dare say it's going to be to the downside, because we just have to take the downside here. The market is in a downtrend. It's beneath the bear market downtrend. You just got to lay with the trend itself. So the trend is your friend until the end. At the moment, trend is still down, so we have to respect that. And if we are to get some volatility, we'll probably see it to the downside. And hopefully, within the later half of October, we get that pivot and we see the market start to close higher. So the signal here would be if within the first week or two of October, we start to see a move down, maybe something significant that brings on that extra FOMO to the market, or maybe even the FUD, and then we see a higher close, probably above the June low, that's 17,500. Pay particular attention to that for a signal of strength or weakness for October. Then that is going to lay us in good grounds for a move up in November and December, and potentially taking out this bear market downtrend. Whether that's later in Q4 or it happens in October, that would be a very good setup, a strong setup for October to push lower, take out these stops, just rip that band-aid off the lows, and then push higher later in the month of October. That's going to be a really good signal for me. And then that's going to bring on the extreme FOMO. So that leads me to my October prediction here. I think we're going to see a fair bit of FOMO, if not at the end of October, leading into the later half of Q4, whether that's November or December, especially if that move happens. People will feel like they've missed out on the lows. Maybe even if we get that little signal up early on in the month, we go up and down, that would bring on a fair bit of FOMO, because people would think, I've missed out on the 18K or the 19K Bitcoin. We run up to 21, 22, and vice versa. So that would be the emotions. So I think the volatility is due to pick up. I'm not going to lay a massive claim to that like it's anything like brain surgery. It's pretty straightforward. The moves are getting quite tight, so we have to expect that the volatility is eventually going to pick up. That is going to guaranteed lead to extreme emotions. We got to see where it breaks out first. To the downside, obviously extreme fear. Then you want to see that move up, and that could signal to you that the fear, the FUD, is short-term, temporary, especially if you get the close above this June low, and obviously as high as possible, probably above this particular area here, which is about 19 and a half. That close came in there and you missed whatever low that is, that would be a pretty good sign that we're about to move up a bit higher and test some higher prices. And this could be the accumulation zone where we do start to head up and down over the coming months before finally getting a breakout, a confirmed breakout in the macro bear market downtrends. And for reference of the previous bear market downtrends, these are the monthly swings using our Gann swing indicator. I've left a link to this in the video description. That's TIA Gann swing indicator. You can see we had 1 monthly, 2 monthly, 3 monthly swings. The fourth was a breakout, a retest, and then on the fifth monthly swing top, it was very much on that the bull market is here. Again, in 2018, you had 1, 2, this one was higher, 3, 4, and then the fifth one here was a breakout, the retest, and it took off. So if we have a look at that on testing this top, you can see the market cleanly got above, tested the top of this bear market downtrend. The market hadn't broken the previous old all-time high yet, and then took off from that point. So that's what I'm potentially expecting here, probably over the coming, it has to be at least sort of 4, 5, 6 months to the next 12 months of this sort of action playing out, just based on the previous 2 cycles and how long it has taken for the market to cleanly break out of any sort of low accumulation period and give you a very confirmed signal. This has been a massive October price prediction video, so make sure you are subscribed to the channel, like the video up if you're finding a ton of value from it. Quick shout out to video sponsors as well. This is specifically for our channel here, 8,700 $25 of sign-up bonuses with BitGet. Everyone can use this exchange. Link is in the top of the video description. All the rules are there so you can understand how to get your bonuses. And there are special bonuses, especially for TIA, which is the Investor Accelerator group down there. So check that out as well. All right, so the cycle buy zones, this is what I was talking about earlier in the video. Anything under about $19,600 has been looking like very good accumulation for BTC. I'm noting this all the way down to about $11,300. This is my range zone for the 2022 bear market, where I'm looking to be buying and waiting for this next price increase. Like I've showed before in terms of timing, we're nearly there, probably this quarter, if not quarter 1. October is going to be volatile. The buy zone, I think, is well within play right now, and this is just going to take the next few years to be able to take those profits on the way up. Now, the other piece to the puzzle is, of course, the US dollar. I did a video on this yesterday, so check that out. Links will be at the end of this one. The US dollar could potentially be cooling off in a macro time frame. Yes, it could keep moving up between 100 and 120 points here, but there is the looks of a slight cooling off at the moment. And of course, Bitcoin has been holding up relatively well. So if all of this works in together and the dollar continues to cool off, maybe we see that volatility to the downside with a little bit of a jump over the coming days in the dollar. And then we start to see that switch the other way. Bitcoin's held up. The US dollar has been going strong in the short term. If the dollar does start to cool off, maybe we finally see some of that steam released onto BTC and we finally break the bear market downtrends, which causes the FOMO and the volatility as we break out of this particular zone. Remember, this is all predictions. Nothing is guaranteed. Just trying to piece some of the fundamentals and the macros together here for a bit of a picture so I'm prepared moving forward. And that basically leads to some of the volatility blowing off some steam after such tight ranges. So a final look at that October prediction. The emotion is going to increase. October investors, buy in the cycle low zone. Traders, trading opportunities potentially becoming more lucrative with the breakouts and increased volatility likely. I know it was a long way to get to that particular answer, but when it comes to analysis, I prefer to go into more detail and from all the detail, make something nice, clean, and simple to execute on the way out. Essentially, that's what you would have done for your university assignments or anything like that. You go into a lot of detail, and then you want to make it as simple as possible once you come out of that analysis. Just talking about that without any sort of background really does no service to you or to me. So I hope you enjoyed that. Smash up the like, subscribe. Links in the video description for TIA Gann swing indicator and also BitGet and Bybit sign-up bonuses over $13,000 there. Check them out. Make use of those while they're still around during this bear market. I'll see you guys at the next video. Until then, peace out.